Alright, welcome back to Following Live. Here we pick a couple instruments and follow it during the month using very simple objective methods, just swings and gaps. And just as a reminder, a new low confirms a high. And we're going to use the reaction leg to project and measure and follow the waves. And the biggest reaction leg will be a major, the next biggest will be the minor. And it's been a wild and woolly month in volatility like we haven't seen before. And so this is a important time to stabilize our practice and have simple objective methods to be able to map these markets in the height of all this crazy. It's hard enough to be objective and trade with all that's going on in normal times. But in times like this, you really need to be able to come in here and see this market objectively when the whole world's going crazy. And it doesn't matter if the swings are bigger or littler, they're going to move in swings and we can map them the same way. Now, I didn't do any trades in this guy myself, and I've been telling people to consider not trading while in this. It's not a good time to trade unless you have to. The currencies are behaving a little more easier, but they're still pretty wild. And so if you must trade, lower your size. But volatility will return, but we're not here to do this for excitement, because you can lose a lot of money very fast in all these, especially these futures markets that just... Alright, so that's my word of warning here. But either way, let's map it. So here's where we left off. We said this, we don't know what this is going to be. If it goes higher, that'll be a low, and then we'll measure that way. If it goes lower, right, that'll be a high, and we'll measure that way. And then we found this swing. Now notice, I'm doing this very simply. See, there's no outside influence on me. There's no outside news. I'm not predicting what the economy is going to be in 3 months. There's a lot of people already doing that, and they're not very good at it. They never have been very good at it. So why listen? It just gets in your head. So this is real easy. You follow swings. And so let's see how following swings could keep us straight even in these times. So this is where we left off. Boom, boom, boom. And you get this. This is limit down. And this is why I'm reminding you it's probably not a good time to be trading. Let me just throw this in right now. I did a blog on volatility and setting stops, and this is an ATR, average true range, and it's a good way to take a measure of how wild the market is. What it does, it takes the range of each bar and averages it over 34 bars or 200 or whatever you want. So if you look here, you can see it's 94. Now that means every bar is moving 94 points on average. If you were trading back here, you can see it was 28, 30, 22, 20. So if you're used to trading in 20, 30-point days, 10, you come over here and it's moving 90 points in a day. Number one, you have to adjust yourself mentally, and you have to adjust your stops. And you should probably leave it alone. Alright. Keep an eye on this volatility as we go. So either way, let's just follow it. I did a blog on that, so you can check out the blog post. Alright, so it looks like we turn at a minor swing. And this is what median lines do, by the way. We boom, boom, boom. Precision. We're drawing off the minors. Now, no matter what's going on, that's all I'm doing, is I'm following. Now that I've made a new low here, I have a new major. So I'm going to follow the minors and the majors every time it turns. So here, the fax jack, it beat the majors. So I'm going to watch the minor. I beat the minor. I'm going to watch the major. stretches the major a little bit, but it turns. Everybody see that? This is in the craziest of times, and these are, I'm pretty sure these are limit down, meaning if you got excited and bought here, you got gapped open down here. Keep that in mind. That's a lot of points. See, now look at the volatility. It's already jumped to 161 up here on the left. You don't want to be messing with that. All right, so swing still. We follow, we map. It's very objective. When this market turns, we're going to know it. How are we going to know it? Well, it's going to quit doing that. Period. The end. If we make new lows, this becomes our new swing. New lows. See? It's very simple. Price reaches the median line. And we follow. I'm not predicting, I'm following. As it comes up, I'm going to project. And it starts to turn. It stretches it. See it? It's trying to make this wave. This wave is trying to make this wave. And it does it. See, it changes. See, this is what, just look, just draw the line between here and here, or draw the line between the confirmed majors. You can see it, right? See the rhythm, boom, boom, crack. It ain't doing that anymore. Now there is a possibility that it just grows up and then becomes a bigger swing than this one. But this is just following. And what do we do once this guy gets beat? Turn around and follow it the other way. So here what we can do is we can say, all right, we can, since this is the last swing, okay, since that's the last swing, you know, you can make a case that this broke and did like that, but it just poked. It didn't really break. That broke. This, you know, when you're doing these swings and you see something like that, that's not a new low. All right, that's, well, maybe, yeah, that's a new low. Okay, so what we'll do now is we can follow it the other way. We can grab this smaller swing here and this bigger swing. So we'll follow this guy. Well, we'll have to wait and see if it gets a new high. We might as well follow the gaps. Looks like price is starting to behave a little bit better. And there, we have a new high. So what we'll do from here is, let's take it to current, is we'll follow it with this guy, the major, and then follow it with the minor. And one of the things I like to do while I'm trading, you can see the volatility measure, right? You can see it slow back down to only 90 when it was 190. Doesn't mean it won't pick back up. But one of the things I like to do when I'm trading, now this is just simple following a market, all right? Again, check it out. It's doing that. It's doing that. Ain't doing that anymore. All right. Let's hand it off and go this way. It's that simple. And so even in the midst of all the crazy, we can see. And one of the things I like to do when I am trading, if I was trading this, is I'd be combining some of these swings with gaps. But either way, let the swings, let the simple swings at least show you which way these markets are going and when they switch. It could switch again. You know, there is a case for this guy to, say, double out and make a big boy swing. But we'll talk about that later on. But for now, these swings have changed. Now let's go see what our New Zealand did. All right, so here on the New Zealand, we were marked like so, and like so, right? The minor, something like that. Yeah, something like that. And we were following it from here. We were following minors, and we were following majors. So let's see what the New Zealand did. Let's see what we can learn. Pow. This is what I mean. Not a good time to be trading. This is a 300 tick bar. All right. Surprise. So what do you do when you have something like this? Really crazy, right? I don't think this thing has ever had a 300 tick bar. Look at that. So what do? Let this thing carve out a swing, and now watch. We'll take it from here. We'll say we have a high. Brand new. Let's start brand new. We have a low. These guys disappear. Right? It's like we have a brand new world. The chart has just started its world from here. Don't worry about what's on the left. And follow any minor and major swings. Right now we don't have any swings. But now we can start to follow. So let's see what we could have done with this market. So we were following this, and we have no idea if this is going to make a high or a low. It has to take one of them out. But you can still follow. It's making minor swings, playing with the low. It's making minor swings, playing with the low. And you can see again, this is how, drawing works one way or the other. However you wish to draw. Okay, now we have minors. Now we have a major. And so it's interesting when you're doing this to just come into the market and draw a high and low on any piece of action you want to. And from there, one of them will be taken out, and it'll begin to carve the controlling swing out, the major swing out. And it comes down, and you follow. Anytime it turns up, if it turns up. See, I'm not interested in news here, nothing, I don't care. See the difference? And it's this calmness we need to work into as traders. Here, I know for a fact. See, whether you make trading these in some form or fashion or not, the starting point for any trader or anybody trying to use skill doing anything is to start with what is. That's what we're doing. That's always the starting point. And so, if nothing else, this gives you a what is. We're going down while we're making these blue swings until we're not. And from then, we can learn different ways to take advantage of that, or different ways to see clues of a turn. But you see, even in this middle of this 400 tick move, this is what price did. It turned here. So you watch the wave. Will it go down, or will it change? It wanders, it wanders, it wanders, it wanders, and it changed. And you draw a simple line from one to the other, and you know that something changed. And now you're going to follow it the other way. It's going to hand off. Now in this case, I might add a little bit here. See the V in the gap here? I'm going to use this V as a major turn because gaps, this is a nice relative gap. Gaps are considered highs too. If that's too much for you, don't worry about it. So I'm going to consider this my major that gets taken out. Just watch. Just watch this gap. Play with it. Fact. Play with it here. Touch it right here. Fact. Come through it. Fact. All right. So these are buyers taking out some sellers that we're controlling, and so that's what's going to make that a high. And then we'll make this our minor on the way up. Okay. And anytime this thing pulls back, we'll follow the minors. Looks like it didn't even do a minor, and that's current. So we're going to keep following the minors and the major. Now if you look, you can see where this market slices up right here. Shoom, right? It's playing. I mean, just get it. It's playing, it's playing, it's holding itself down, and it goes from here. Crack. See, that's the transition. It's also a gap. So that's a minor gap. And I'll get a little fancy and put a major gap in here, which will be here. All right, so this is what we're doing. The blue got beat, period, the end. We're now doing the red. These might get beat and go the other way. Just follow it. All right, so what are we going to do this month? Let's come back over here and let's do the Dow, the E-Mini Dow. By the way, I did a blog post on the S&P Weekly, along with several stocks you might want to check out. You see, I'm just following swings. Period. The end. So I'm just trying to point out that we need to be able to see things very clearly. So here's our Dow. And it's looking a little crazy, right? So let's start this guy's life off from here. All right, so what are we going to use? It's obviously it's going up. I don't care about what they're projecting for the economy. Truth is, they have no clue. They've never had a clue. They're never right. Just go with that. That's about the one good trade you can make. Let's say this is a nice solid swing that changes. Okay, there's a case for this, but let's just keep it simple. So this will be our major. See, it doesn't quite make the major. So this will be our minor. That's simple. Major, minor, and we will follow both of these. Okay, we'll follow both of these from here, and I'm just going to notice that the major lands into where price lifted from. So what are we going to do for currency? So that's our simple map. For currency, let's come over here and use the euro. Now the euro seems somewhat behaved. If I put a volatility measure on it, you'll see it's in the 20s here, 30s here, got 40s, it was double, 50s. And so the euro is such, although the volatility is bigger, the swings are larger, it's trading somewhat tame. But again, in these times, you got to be careful. So where are we going to trade this guy from? First, we need to pick a frame. What do we want to use as a frame? I like to get a little closer in and then let the market carve itself out. So, for instance, let's just get close in here. Okay? Find your swing. What's your biggest swing going down? So take a look at this map. This is how you start to get a handle on what price is doing. This is how you start to orient yourself while everybody else is screaming up and down. That's your biggest swing. That's your next biggest swing. Take this, project this from the bottom. You see, we're pretty close to it right now. What does this tell us? This tells us this market is trying to make this wave. It's going down. Facts check in this frame. Now, it started up. We can follow the swings on the way up. it's making swings on the way up about that big. Now that price is here, we'll follow the upward swing. So we're going to follow these minors. So remember, what these minors are doing, these minors are what's making up the major reaction leg. So if we have a major reaction leg, it's going to have minors that make it up. And a lot of times I use that as something of a tool to see when it changes to get in on the major. So I'm throwing a few little tidbits in with this. But this is the wave, and this is the wave triangle. If you can do just this, you can learn everything you need to learn on your own just by watching price. Now if I add gaps into the mix, I have an up gap. If I come down, there's a relative down gap. Gaps are real easy, right? You see contraction, expansion, contraction, okay? So we're bumping up against, and with gaps, I did a blog on those. You can check it out. For an up gap, I marked the bottom third, zoom, what got zoomed. For a down gap, I marked the upper third, mark the upper third. All right, so this is our very simple Euro map. It's going down until it's not. And if it decides to change, I can see about where it wants to change, somewhere during that red swing. All right, so good luck, be safe, stay healthy, be safe in the markets, be safe otherwise, and we'll just keep following these markets no matter what's going on. They're going to make swings.